Hey there, on today's video, I'm going to talk to you about a little more of a sore subject here in Southwest Florida, and that is flood insurance. Our flood insurance rates have gone up considerably in the last couple of years, and that's due to some changes that FEMA has made. And so I want to give you a brief rundown on what happened with those changes and how they're affecting our rates. By the way, if you don't know me, my name is Dustin Guthrie. I'm a longtime resident and near 20-year realtor here in Southwest Florida. And if you have a place to sell here in Southwest Florida, or maybe you're looking to move to the area, my contact info is down there in the description. I really would appreciate it if you would reach out to me either by phone or text. You can also click that link down there if you want to schedule a meeting with me, but really would appreciate it if you give me the opportunity to chat with you, and I'd love to help you out. That being said, let's go ahead and talk about what happened in 2021 with these FEMA changes on flood insurance. So prior to 2021, most of the homes in our area were insured through what's called the NFIP, or the National Flood Insurance Program. It was a heavily subsidized FEMA program. I think they paid out like $30 billion more than they took in premiums. So it was heavily subsidized, and subsequently that made our flood insurance relatively cheap here. It was based on things like elevation and location. A typical average policy for a somewhat reasonable sized house was in many cases $1,000, in some cases even a little bit less than $1,000. But in late 2021, that all went away. The subsidies went away. FEMA put in place what they called Risk Rating 2.0, and basically Risk Rating 2.0 changed the maps and changed the way that they priced the flood insurance. And so now it's based largely on their determinations of things like average rainfall for the area, what they say is climate change and sea level rise, and the cost to rebuild the property if it gets destroyed. So bottom line, flood insurance is much more expensive now than it has been in previous years ever since that Risk Rating 2.0 came into effect. So what can you really do about it? Well, the good news is if you had a flood insurance policy prior to the 2021 change, you're going to be grandfathered in at the lower rate, and they're only going to be able to increase your rates by a maximum of 18% per year. So you're eventually going to get up to the higher rates that current new policies are seeing, but you're going to enjoy several years as they kind of gradually increase it, a maximum of 18% per year until they get to that current rate. If you're shopping for a brand new policy, though, you're going to be hit with those current higher rates. And there's a 3-step process that I use when I'm shopping with clients, and I'm going to give you those 3 steps right now. It's going to best help you to mitigate the circumstances. Hopefully you find a lower rate, but at the very least, it's going to help you know exactly what you're going to get into prior to moving forward with the purchase of a home. Now, at the risk of sounding self-serving, the best thing you can really do is involve somebody like me in your home buying process. I'm immersed in this all the time right now. I know the ins and outs of it. I also have all of the current good insurance contacts that can help fill in the gaps and point us in the right direction. So your best bet is to hire somebody like me, a qualified realtor in your area. My contact info is down there in the description, so reach out to me if you are looking in Southwest Florida. But that being said, if you are going to go it alone, here's the 3 steps that I would take to best help with these new flood insurance rates. So step 1, the first thing that you should do when you're looking at a property to buy is look up the address on the interactive FEMA maps and find out if it's in a flood zone, number 1, and number 2, what flood zone it might be in. And I'm going to go ahead and put the link to the interactive FEMA map down in the description for you. You can search by address. You can find out what zone it's in. If it's labeled as an AE zone, it's in a floodplain. If it's something like X or maybe X500, you're outside of the flood zone, and that means more than likely your mortgage company is not going to require you to have insurance. So check the map, number 1. All right, step number 2, once you've checked the map and you've determined that the property is in fact in a flood zone, check with the current owner to see if they have a current flood policy. If they do have a flood policy, you need to call that insurance company to find out if it's assumable. If you can assume one of these old insurance policies, that means you're going to be getting that grandfathered rate, and it's going to be lower, and they can only increase it by 18%, like I mentioned. So check with the owner, see if they've got a policy, and then if they do, see if it's assumable. Okay, so once you've determined that the property is in fact in a floodplain and you've checked with the owner to see if they've got a flood insurance policy and they either don't have it or they do have one that's not assumable, then you can move to step 3, which is go ahead and obtain the elevation certificate. You can either get that usually from the owner, or for cases like Cape Coral, I know Cape Coral, you can get it online or with the clerk reports for any property that was built after 1993. But make sure you get a hold of that elevation certificate, because you're going to need it to send to multiple insurance agencies to get as many quotes as you can. And those insurance agencies are going to use that elevation certificate to get you quotes from either a FEMA-backed policy with the NFIP, or in some cases you'll be eligible for private insurance companies. And we're seeing more of those come into the area, and that's a good thing, because obviously the more insurance competition that's in the area, hopefully the lower the rates will be. But once you have all of those flood insurance quotes, then you can make an educated decision as to whether or not you want to move forward with the purchase, or if it's going to put you over the limit that you're comfortable spending every year. So I hope those 3 things helped you out at least a little bit, or at least gave you some information that might be able to help you out. I will say one real quick note: some of the newer properties, the builders are bringing in enough fill dirt to build them up to higher elevations, and in some cases that can put your new property outside of the flood zone. So definitely, if you've got a newer property built in the last few years, check your elevation certificate. You see situations all the time where a newer property, even though the homes surrounding it are all designated in the flood zone, you've got this little island where this house was built up high enough that it's not in a flood zone. So even if your new property is currently designated in a flood zone, check that elevation certificate, because there are some rare instances where you can take that elevation certificate, submit to FEMA what's called an LOMC, or a letter of map change, and possibly have FEMA redesignate at least your lot into being outside of the flood zone. Obviously, there's huge advantages to having your home being outside of the flood zone, not just in not being forced to pay for flood insurance, but also for resale value. Obviously, if a buyer's coming in and they realize that they don't have to pay $1,000 a year for a flood insurance policy, that creates quite a bit more value for your home. So hope that helps. If you'd like me to check that, if you live in Southwest Florida and you'd like me to check that, give me a call. I'm happy to do that for free of charge. Beyond that, I hope you got a little bit out of this video, and if you would, please hit the like button. Go ahead and subscribe to the channel as well for multiple videos like this every single week, and I'll see you on the next one real soon. Thanks.